Greetings everybody, let's update our view on the gold market. Sive is here with the Forex Peace Army.com. So on the gold market we see some signs of the stabilization. We do not have a lot of very bright patterns as we have currently on the euro currency. Situation is changing as well, but as previously gold market was better balanced compared to the risks and demand. So for instance, when the dollar was rising and investors buying the United States treasuries and running in safe haven, which should press on the gold. At the same time, demand for the gold itself, it supported it, and that led market to stay relatively flat in the overall period of the chaos that was staying on the markets. Right now we see a bit opposite situation, so we see some stabilization as we suppose that some national reserves, particularly Japan, started coming on the market, and that led to some drop in crude oil prices. Also we see some rhetoric from the both sides of the conflict that could be treated as a light hints on a de-escalation. So that start pointing some conditions, some I don't know, kind of the hints on a possible ways how the conflict might be resolved. So that also currently decreases a bit the degree of the confrontation here. Although attacks are not stopped and everything mostly stands the same, but at least counterparties starts to talk to each other. So although via media anyway, and currently we see that dollar start dropping, which provides some support to the gold performance. But at the same time, demand for the gold probably in the current conflict stage also slightly decreased, so it doesn't let gold start straightforward upward continuation. At the same time, as we said in the weekly report, we have big bullish pattern suggesting taking out of the stop, and here we have to get an understanding whether this performance that we see here is continuation of that one, so we will get upper continuation right from here, or this is just some kind of the stabilization before we get some maybe deeper retracement, and then we start searching another chance for reversal. We will keep watching for it until the major pattern is valid. So only if market somehow will drop below the 44 area, erase the grabber on the weekly chart, that tells us that we are getting something really big to the downside, but for now we do not have reasons to suggest this. On the hourly chart, you could see that market stands in some range, so some sideways consolidation after the drop, trying to make some upper direction. Although here it might be treated as a kind of the stabilization around strong support area, and maybe we could suggest here some signs of the bearish dynamic pressure if market remains flat. But in the recent few hours, you can see that we are getting some more visible attempt of the market to keep going higher. It means that here we could get some continuation, besides a few patterns have been completed that we discussed. As a result, we've got on the follow time frame chart two grabbers. This is just taken out with the stop. Not necessarily should be straightforward upward continuation, but at least market should move slightly higher. And at the same time, on the hourly chart, let's have a look. Indicators was correct. On weekend, we said, take a look, this catalyst triple to sell could trigger downward action. And indeed, right on Monday open, we've got this big drop on the gold. But then it hasn't led to break out of the lows. Market was able to stabilize performance here. We've got this catalyst triple to buy. And we also talked about last week. And here on the bottom, we've got also two grabbers on the 5-time frame chart. This might be treated as a short-term intraday bullish patterns, and here you can see what's going on, market returning right back up. So obvious, most logical nearest target will be the ABCD that creates an agreement with the 5260 Fib level, and that particular will be the most interesting point to watch for, just because if market will not break it up and start dropping down, this will keep chances for a deep retracement according to this scenario, as I said, so it might be some downward extension. But if we will see that market is breaking it up, moving above the 5260, that will significantly increase chance for straightforward upward continuation. Why it's really so? Just because if you take a look at the overall swings, you will see that in this downside drop, so already we talked about as well. So market has shown reversal swing, better to say. And you can see this lows stands lower than this one. So this swing is smaller than this one. It calls as a reversal swing. Usually after reversal swing, market tends to show deep retracement. Gold market in general shows deep retracements, but particularly in this situation, retracement to the 618 level, it stands in a row with a normal bearish scenario. It will not break it. That's why any performance right to this top, right to this area, doesn't mean that it's bullish. It's just normal response because market has good upward momentum. After the first collapse, momentum is still here and it pushes market higher, makes it to show deep retracement. That's the major background. But normally, if market remains bearish, it has to turn down somewhere from this level. It should not let to break it up. That's why this will be some kind of the signal point or some break-even point. And if we'll see that market is really breaking it up, it means that this performance, it's not retracement after this one anymore, and it turns to something bigger and suggests a possible upward continuation. So that's in towards why we need to keep an eye on it. If you have taken any positions with these grabbers, the Gartley Steeple 2, that's great. So we could keep it even later when the market starts challenging this level, just move stops to the break-even or even tighter. Think about partial close of the position. If you would like to take the short position, the first area to watch for is of course 5260, because here we will get big Gartley Steeple to sell pattern right at the 618 resistance agreement. So at least minor bounce here is quite possible, which makes this area attractive for initial position taking. So for the bulls who haven't taken any positions here, currently I do not see any good setup. You need to wait either for the signals that market will break this level to the upside, or some another chances. So for instance, we will get here some drop out from this level. Maybe we'll see some other bullish patterns like this one later that also we will try to use. For the bulls currently, I do not see any good setup for trading immediately.